Let's kick things off with the broader market stocks higher today. The Dow and S&P and Nasdaq all on track for weekly gains. And Mike, maybe we're a little bit off the highs, but
if you want to know why, it's because he brought this damn hat here.
And we were just discussing.
And he told me to put it on, and then he ruined everything.
Throw cold
Dow
water
35K
right
hat.
You're going to put it on?
Look, we're still above 35,000. I think probably safely so. So we're okay.
I was going to say, in terms of
put it away.
Nice build on yesterday's gains, and very strong weekly gains.
Generally encouraging, putting some distance between the lows in here. I think the fact that it's still cyclically led also probably a good thing. So you're checking off some of the boxes. We have an options expiration today. We've certainly lost some steam. Russell 2000 is negative. You're seeing a little bit of a bleed lower in the broader indexes as well. So we'll see if maybe it's kind of an enough for now type conclusion, since we are up pretty decently off the off the lows. Really 200 S&P points from the lows a week ago Monday. So maybe have to chop around a little bit. So the bears aren't out of the game. They can still call this just a reflex rally, but I still think it looks relatively encouraging on a full week basis.
Barb, you're always relatively optimistic and constructive, I would say, on the market. Have you been putting money to work off the September correction?
Yes, I have. Yes, you know me too well, Sarah. Because my feeling is that inflation is going to continue to rear its head. We're going to be concerned at different times. And that's really what I think got the ball rolling in September. Correction was due. Who ever knows when? But I think the inflation concerns are real, except that because they've lasted longer and higher than expected. But I think they will come down. As we know, about 2/3 of the inflation number has been used cars, rental cars, new cars, and that's not going to stay high forever. And I think wage pressures, are another question, but I think productivity increases have pretty much offset those. So it's something to keep an eye on. But I think fundamentals are intact. Rates could back up a little bit more by year end or into next year. But in absolute terms, they're not going to be high. So I think we're going to continue to see good earnings growth. Certainly, I think peak earnings were in the second quarter when they were up 88%, but we're still going to see good growth. So you are right, I'm being constructive on this market, but I think we'll continue to see a lot of volatility, which we have all year long.